Okay, recording this video after close of trade Thursday, 13th of February 2014. This video is going to be about the weakness in the US dollar and gold and silver. So that's going to be kind of the main topic of conversation. But just to say, last night I put out a video pretty late just talking about the equities market and where we're going on the E-mini. And put out that video so late I missed the email kind of distribution cutoff. And so if you subscribe to Emini-Watch by email, you just get 2 in a row, unfortunately, because they're only delivered once every 24 hours. So apologies for that. I don't mean to spam you if you think that's what I'm doing. It's just the timing of getting these releases out. And I didn't really have much to say over the last couple of days. Just now everything's starting to happen all at once. I think we're coming into some interesting moves in the markets and get kind of excited with that. So that kind of is why I'm kind of anxious to talk about particularly gold and silver and the US dollar. And just a little comment on the Emini-Watch video, getting a little bit of pushback. You know, you've got to do your own analysis. All I'm doing is saying that I think there's a cyclical inflection point, a resistance that's coming up on the E-mini in the next couple of days. And I just think it's going to be interesting what happens when we kind of reach that point, what the market kind of does from there. I think it's going to be kind of critical for the next couple of months. So, you know, do your own analysis, make your own decisions about your kind of trading, particularly if you're trading, you know, swing trading or long-term trading, but you know, there is an inflection point happening in the next couple of days, and you know, let's wait and see. So let's talk about the weakness in the US dollar and the strength in gold and silver, because we have a lovely little kind of setup in terms of these long-term charts. So in yesterday's video I was talking about the importance of this cyclical support on the daily chart, and you can see with today's activity we're dropping through this cyclical support on the dollar index on daily chart. That potentially takes us into a stronger move on the downside, potentially testing these lows because we're breaking into a downtrend. You know, we tried to get through 81.5, we ran into exhaustion and blue professional up bars, first bearish divergence and a flush the last time, and this has been, you know, 2 or 3 months in the making. So now we're in this channel, and you know, we've been rejected on the upside a couple of times, and now we're kind of testing the downside. This break for me is pretty important, and you can start to see it. The currencies that are really doing well are the British pound and the euro. And I've been talking about the pound forever and ever and ever, saying it's going up, and here we go, breaking to new highs here. Yes, we had a pullback to end of trend sequence kind of going on here on the daily chart, and we kind of fell off from there. All that said was that's the end of that kind of move temporarily. We're coming back up. I think we're going to bust through. On the weekly chart, we have still not done anything to end this trend. We've not gone into exhaustion patterns, blue fractional up bars and so on. All this is on a lower time frame. We just temporarily ran out of steam there, which we did. We dropped off, you know, quite a bit, and we're coming back up and breaking through. So I'm kind of bullish, continue to be bullish on the British pound and the euro. Yesterday's video saying the 137 level is absolutely key. So in the euro here, again on the downside, we've put in exhaustion, selling, bullish divergence and flush patterns here. We've not moved through the downside, and we've had this sequence of slightly lower lows on the professional blue professional bars, and they've been holding, you know, gradually 135 here, and now we're having a go at breaking through cyclical resistance, potentially into uptrend on the daily chart. So you know, all of these are saying that we've got strength in the European currencies and we've got weakness in the US dollar, and weakness in the US dollar also kind of translates to strength in gold and silver. Just on the dollar index kind of pattern here, this is the daily and the weekly chart. You know, I could show you the way we're kind of rolling over here, running out of steam, coming down here. On the weekly chart you can see cyclical resistance has been in for a while. That's why we haven't been able to get through this 81.5 level here. That was blue professional up bars into there, and we've had bearish divergent signals kind of coming in. All we were doing on the weekly chart was kind of mid or towards the last quarter of last year, bouncing off Rambo patterns, but the professionals have come in again on this little rise, and they've kind of been selling it down, and so this has got to run cyclical resistance to support on the way down, and 79 is kind of in view. So you know, let's see if this turns into a trend move on the way down. Commitment of traders doesn't particularly support a fall in dollar index, so that's, you know, got me a little bit concerned here. I'd love to see this go negative. That should be, you know, what we're seeing, that you know, that the professionals are kind of supporting a drop there. Remember, on the commitment of traders numbers, I switch these things upside down because that makes more sense to me. In the background, you know, on the monthly charts, we've got all these bearish patterns from which, you know, previously we've seen, you know, declines and rises and so on. So that's the last time we saw those. But maybe once we break through 79 or something like that, maybe the professional picture will start to change. So, because of that weakness in the US dollar, we've got strength in gold and silver because they're the inverse, effectively, of the US dollar. And so here we go. And I've been talking about gold and silver just waiting in this basing pattern. I was waiting for a nice little kind of pullback to end of trend, and we didn't get it. We got a break through resistance here. We came back into the lows of those blue professional bars, and over the last week or so, bang, we've just come up to 1300 now. So on the big picture, on the weekly chart here, you can see, the big picture was nice for the, this move up to 2000 a couple of years ago. That was the blow-off move with exhaustion buying. And then we had bearish divergence, and this is when we dropped in below 1700 into this big downtrending move. And we've had a nice pullback to end of trend, blue professional bars coming at the lows, bullish divergence kind of comes in, and then we've rallied from this Rambo pattern where all the amateurs were either kind of just giving up on their long positions or saying, going short because it was going to go to 800 or whatever they were reading. It's been a pullback to end of trend sequence. The last little move here on the weekly chart's been a bullish divergence come in, and 1200's held. We had this big blue professional bar. We tested down into it. Now we were trying to make pullback to an end of trend, and we just cracked through there into an uptrend on the daily chart. So now gold's running into an uptrend here. So let's see where gold goes. That's kind of supporting continued decline in the US dollar. And on the commitment of traders numbers, it's a little bit better. One of the reasons why I liked kind of gold for a long time is that once the low was made in 2000 and we started printing money, the professionals have been supportive in terms of the commitment of traders in this entire move. And even during this decline from the 2000 number all the way down, they've been kind of above the zero line, which is for me kind of important. The other one that's interesting like this is crude oil. Crude oil in the last couple of years changed to this pattern, and I think it's because fundamentally we have too many people on the planet and too little resources, and so we're never going to see whatever we used to see, $16 a barrel oil. I think we're going to be seeing 100 plus oil for the rest of our lifetimes, and so this is why this pattern has kind of flicked over to this kind of view of the world. So we've dropped off pretty hard from the $2,000 to 1200, but then they've kind of come back in. You can see we've got the interest back in with the professionals kind of supporting this break move in gold. Silver's put in a nice little pattern, a little bit kind of neater in terms of pullback to end of trend. Exactly the same picture in terms of the weekly chart. It was the exhaustion move in 2011, tried to get up to the $50 kind of here. We had blue professional up bars into an exhaustion pattern. Then we tested back up, pull back to end of trend with amateur bars here, bearish divergence, bang. That was the start of the downtrend move, and then we came back down into the 19 number here. And then on the downside, exhaustion selling on a left shoulder, blue professional bars kind of coming in, bit of a short covering rally here, pull back to end of trend. There's a little Rambo pattern there just underneath here, just like the gold chart as well. Rambo, amateurs giving up. They were buying in the 30s and 40s, and when it came down to the teens, they were like getting out or getting short. Don't know what they thought the number was on the downside. No, on gold, people are talking about 800 as a downside target, but no, it's kind of held, been a flush pattern here, little bullish divergence. So on the weekly chart, we've got a nice little setup, pull back to end of trend with all of that good stuff kind of going on. And then on the daily chart, exactly the same thing, this last move down. Exhaustion selling, bullish divergence on a left shoulder. We just test it a little bit, pull back to dirty end of trend. The pullback levels got violated there. That's why we haven't got an end of trend print there. That's what I call a dirty end of trend signal. Came with a flush pattern, and then now bang, 19 and 20 has been the number. And here's a little gathering pattern. Blue professional bars under resistance at 20 and a bit, and then we're just breaking through today. So commitment of traders, same deal with commitment of traders. It's got the same kind of picture as gold and silver. As gold. So it's been professionally supported this entire rally, and then this last little sequence here, we've got the professionals. Actually, they've been dropping off a little bit here, but it's still above the zero line, so we've got kind of professional support for a rally kind of going on here. So silver gathering pattern, breaking into an uptrend above $20 here. Gold, we've already done it. The 1200 number was the low kind of down here. We broke above resistance into an uptrend, and on the weekly charts it's all kind of good. So we've taken our time doing this entire move, and now gold and silver stealthily have kind of broken in. I think the move really kind of got going with Janet Yellen kind of speaking. I suppose everybody was saying, well, she's just a duplicate copy of Ben Bernanke, and we're going to see money printing, and therefore weakness in the US dollar and strength in gold and silver. But they kind of work inverse to each other. US dollar is starting to weaken again and move through, kind of to test previous lows. Gold and silver now, we've had our kind of decline set in on the weekly charts, nice little pullback to end of trend sequences, and so I think we're going to see some strength in gold and silver. And those guys have been pretty quiet, over the last 18 months or so. They've been saying, it'll pop. You just have to hold on, and hopefully we've kind of done enough damage on the downside that we'll actually get those kind of trending moves on gold and silver that they've been waiting for. Because I don't know, I think they deserve it, because the entire equities market is driven by what the Fed says. It's got nothing to do with earnings anymore. It's got nothing to do with corporate profits or corporate successes or productivity growth or new products being launched. And the only thing that matters is what the Fed says, which is just a centrally planned economy. So there we go. Look for continued weakness in the dollar index. If we start to this bar hasn't closed for me on a daily closing basis. It'd be interesting to see if that's a blue professional down bar with decent volume and a falling through the ice type pattern. So we don't know what that looks like at the end of the day. But I'm seeing this as a break into another downtrend move on dollar index, and it's being supported by trend moves starting to gather pace in gold and silver. There we go. Hope your trading's going well.